Quick update on the ongoing consolidation with Bitcoin. We'll also touch on Helium and see how that's panning out. So I really want to focus here on our... How long has this been going now? Probably about 200 days. 175 days. Consolidation at this point. I just want to update you all on the probabilities that this is not a bear market top. It is not what topping patterns look like, and this still, all of this still looks very healthy and corrective, which basically means it's just an accumulation range for us to eventually move higher. One thing I want to point out is after this first initial retracement from when we hit 74K, we did come up and hit the 89% retracement level. Now, to do that twice, especially, is very rare for an impulse. If you were to say a 5-wave classic impulse down, the wave 2 to retrace all the way to near 90% is very rare, and you may as well just count that out entirely. So what we're looking at, to the best of my ability, is just a, mostly so far, a sideways WXY, which is basically just a series of 3-wave moves, back to back to back to back to back to back to back, a bunch of 3-wave patterns until eventually everything resets. For instance, the RSI, if you really notice, this is quite telling. Moving basically sideways, RSI has gone from near 90% to 45%. Now this is a very bullish sign rather, and further entices us that this is just a correction, consolidation to eventually take the highs. Now let's zoom in here what really we can expect to finish out this most likely more boring sideways consolidation. Now I have two main scenarios that probably can play out here. One you see listed on the chart, which is this final wave Y to finish off our bigger WXY, will end in a triangle pattern consisting of an ABCDE. And what that would look like, let me find my arrows real quick. It would basically consist of a bunch of 3-wave moves simply like this. Every move A to the B to the C to the D to the E, ending in a contracting diagonal, will consist of an internal 3-wave structure. And as you can see, that would just look like more boring sideways price action. The main key difference is this low at 49K would hold, and most likely we would form a higher low down here at the 52 to 54K region, which we would most likely come down in some type of three-wave pattern here in our C to reach that target. And you would like to see continued bullish divergences forming between these lows, and your final wave Y would pan out and hold, and we would then move up to our final impulse of the bull market. Now I have listed here another 1-2 on the larger macro scheme of things. A 1-2, 1-2. This very well could be a 1, 2, 3, and our fourth wave is completing, and we move up for the final fifth. That is yet to be determined, but either of those options are very viable. Now, if you're a bull, you want this low to hold in place of this triangle to play out. Now the bears could have an opportunity to briefly take out this low one more time, and that would consist of another WXY type scenario, which would basically be the same thing but not in a triangle and more sideways downwards consolidation. Key here is this 1.382 level at 49.50k is the extension off this wave W, and wave Y usually does not extend to the 1.618. It can, but it usually does not, and it is not a common target for your wave Y. You like to see the wave Y finish between the 1-to-1 and the 1.382 at max. What this would look like is basically something like that, where you sweep the lows one last time. But again, that is not a guarantee. This is just the two scenarios that I believe are possible. I do give more credit to the triangle scenario because of bullish signs and us already having wicked the liquidity down here. There isn't too much more, say if we go to 47k. And that is what I have for Bitcoin here. Let's take a jump over to Helium and dive into what I have going on here. So the last time I think I made this video on Helium, I believe we were right here or somewhere right here, and I was expecting a correction. It turned out to create another 1-2 based on the severity and the deepness of this correction, which as of now we are in a double 1-2 scenario, just having completed potentially a triple 1-2, but more likely the beginnings of our wave 3. Now if this third wave is beginning to pan out, what we have going on here is another classic 5-wave impulse to complete our first initial degree wave 1 of our 3, which then followed an expanded flat correction to create our retracement for our wave 2. And in that case, the third wave is always the strongest, most times always the strongest of a classic 5-wave impulse. What you would want to be seeing here is a series of 1-2s building up and continued bullish divergences. which so far we don't have any evidence to suggest otherwise that anything else is happening. I am still expecting continued upswings, and the technical target of this wave 3 of this particular impulse would be around $20 for our next immediate large term targets. That is not even close to the main finishing bull run targets, but it is what currently I am still expecting on Helium. Now, this has been the most well performing coin of the month and one of the best of the year. Down here at the lows, around $3, we have, of course, expanded near 150%. And I am in a long position, more of an investment position from the $3 range myself. And I am looking much, much higher. For now, we continue to trudge higher in what appears to be a series of 1-2s building for what should be continued explosive moves higher, as we should be entering our third wave. Now let's take a quick look over again at Bitcoin's heat map, where the bulk of our liquidity resides, to give us maybe a deeper look into where Bitcoin is going. Above us, at 70K and beyond, we have just a treacherous amount of liquidity. Just scanning above this, it's something over 100 billion. At 70K and above, that means if we are to move to 70K and above, we will grab all that liquidity, 100 billion worth, and this is the most prominent part of the chart. We will not leave that there. The market will eventually grab this. Now, we do not know when, we just know it will. Below us, as you can see on this 49K touch, we did grab a very large chunk, which was the bulk of our liquidity that was nearest to us. Now below that at 47K, there is not nearly as much, and I am not sure if the market will want to touch that and grab it. It is there, but it is not a guarantee, as this long bullish wick shows extreme buyback pressure, and we did sweep the nearest largest chunk of liquidity that is not above the 70K range. Now that gives thesis to how this low at 49K most likely can and will hold. And one more thing before I end the video to give us further evidence. This is CoinAnk's or CoinAnk large limit order chart. It shows you where large orders have been placed and where whales are buying. Let's zoom out to the daily here real quick. Now if you look since coming down here back to 64K a few weeks to months ago is when the large whales have been accumulating. Overall, there is a lot more buying pressure here. 10s, 20s, 50s, hundreds of millions, well, technically billions of dollars have been funneling into the market. A lot more buying pressure than there has been selling pressure. This is more proof to an accumulation range that we will eventually break out of. If we go to 47 or we hold the low is yet to be determined, but I believe we will break out of here and go on to 100K in the coming month or two. Thank you guys and enjoy your day.